when you look at the infrastructure that's had to be built around digital assets, it needed to get built in order for us to be able to have these products, right? So CF Benchmarks, just to kind of credit you and your team with what you're doing for the industry, you're the reference rate for the futures on the CME. And the CME futures market is required in order for us to have ETFs. Certainly in Canada, the regulators look to that as a signal that those assets are okay to be launched. And so Solana and XRP really got going once we saw the announcement that there would be futures on the CME. That was a big, big deal up here. Everybody's looking at that. And that big deal is the reason why we're able to have ETFs, because it allows the market makers for the ETFs to hedge their exposure using futures. It also allows the liquidity providers that we buy and sell Bitcoin, Ether, Solana, and XRP with to be able to give us the reference rate. Our funds are tied to the CME, CF Benchmarks reference rates, because they can use the futures market to hedge their exposure when they're going to go and buy those assets to sell to the fund. And it gives us price certainty, which is, of course, what futures do. But before there were the futures, you couldn't have built the ETFs. Like, you could, but you wouldn't have had any kind of ability to have price certainty, which means that it would have been like an active ETF and nobody would have really known what it held on any given day. But frankly, you couldn't, because no regulator was going to sign off on an ETF that doesn't have a kind of established third-party reputable pricing source to use as your nav point. So these things that are infrastructure that I love as somebody who likes to build investment products have been required for us to have these digital assets in an ETF. And it's what's taken crypto from being something that people would play with in their basements on their computers into something that's now like an institutional grade asset class.